Today we're talking the price of Bitcoin and where in the hell are we gonna bounce? This is Cracking Crypto. We're starting right now. Hey guys, thank you so much for joining me. If this is your first time to the channel and you want to stay up to date on the latest and breaking in cryptocurrency news and events as well as price action, make sure you go ahead and click that subscribe button as well as the notification bell so you get notified when we go live to answer your questions. Alright, so with that out of the way, let's talk about Bitcoin for a second, guys. Let's just take a step back and talk about the psychological aspect of it. Obviously, we see all over the social media and YouTube a lot of fear and a lot of psychological anxiety as people approach this area, this particular area in the price action, where they think that full capitulation is going to come and their actions are preceding that. Their actions are acting as if full capitulation is going to come because a lot of people are afraid. They're afraid of losing money. They're tired of the slow bleed out, and a lot of people are just vamping out, where more people are doubling down. I'll tell you that. More people are doubling down, but a lot, I'd say a good majority of people are just on the way out, and we can see that in the price action from the overwhelming selling volume. And I just want to speak briefly on the psychological effect that the whipsaw of Bitcoin can have on people. This is the most panicky time in the market cycle. After we've had a beautiful run up, lots of massive profits, it didn't matter what you put your money into during the bull run of late 2017, the summer of 2017, the very first few weeks of 2018, you couldn't lose money. It was impossible to lose money in crypto. I mean, you could literally buy any shitcoin and make money. Everything was pumping. Everything was pumping, and Bitcoin was doing beautifully. But the whipsaw of it coming back down, that put a lot of strain on people's hearts. And when you hit that bottom at 5,800 or 6,000, a lot of people were freaked out. But then we went all the way back up, and hope was rising, and people were excited. And then we hit that top at around 12, jocked back down. And now the FUD is worse. The anxiety is worse because people aren't sure that we're going to bounce again. That same confidence is not there, and that is reflected in the volume profiles. That confidence is not there, and people think we're going to capitulate and break down. Where's the downside? People want to know. So I will say this. Taking a step back from the charts at these points in times and revisiting and reevaluating your fundamental belief in the technology and what you're invested in, what Bitcoin is, how does it work, how do you run a full node, how do you keep your coins in cold storage, how do you feel about digital sovereignty, censorship resistant, distributed currency, how do you feel about this revolutionary technology that is going to change the world as we know it? Are you interested in gaining $1,000 per Bitcoin? Are you interested in adding a zero on the end of that number, adding a zero, 2 zeros on the end of that price number? Are you long-term or are you short-term? These are the times to take a step back, watch some Andreas Antonopoulos videos, and learn the basics of Bitcoin, learn the fundamentals, and increase your belief in what you're in and what you're invested in and why you're in this space to begin with. I highly recommend you guys go check out what Lightning Labs is doing and all the labs, or the Lightning applications as they're calling them, how they're going to revolutionize and completely disrupt the way we use the internet and payments as we know it. These are things you guys need to know and things that you can turn to in times of turbulent price action to ease your mind and remind you of why you're in this space to begin with. So with that said, let's go ahead and switch over to the charts. All right, so we'll start off by, I'm going to do this. I have a tendency to make longer videos, guys, and I just want to make them quicker. I want to get to the point. So we're going to take a look at a naked weekly for just a second, just so we can get a gauge of where we are. And this is exactly what I was talking about, guys. We see here just about a month and a half ago on the beginning of February when we hit this low bottom. We had this massive wick, this beautiful hammer candle, obviously signaling a reversal, that we had a nice reversal for about 3 weeks. And then there's just this slow bleed out for the last month. Just this slow, rapid, I mean, really, if you want to look at the charts, but it's just been, the price action within those weekly candles has been whipsaw, and it's been turbulent on people, you know, especially traders, especially people trying to leverage so much liquidation, everybody picking the wrong direction. Traders don't know what the hell's going on. It's been a rough time. And for an investor looking at this, sitting back, or a holder sitting back looking at this can have a lot of profound effects on psychology. As I said, this level in the market cycle is the most difficult for people, especially as we've had this nice bounce and come down. So now we don't know if history is going to repeat itself. People are afraid that this bounce is not going to happen, and the signs do not point to that bounce happening as it did back here. I mean, the week is close to being over, and we see none of this run back up, and the volume is not there. This is a very scary time for many people, and that's why I said this is a good time for you to take a step back from the charts. If your anxiety is getting the best of you, if your emotions are getting the best of you, and if you're about to do something stupid like sell all your Bitcoins, this is a good time to just take a step back, take a deep breath, and realize why you're in the space to begin with. So let's break down some TA. Let's jump to the daily chart. And then I'll throw on my drawing tools. All right. So this is not going to be helpful right now, these two boxes. Okay. So earlier in the week, if you're in the Discord, I had indicated along at this level, obviously this was a nice trade. The exit would have been right here. And when we were here, I had drawn this level on the chart when somebody asked me what was the downside for maximum potential. And obviously, I picked the bottom of the pitchfork, this nice pitchfork that I've drawn on the logarithmic chart, this downward sloping trend line. And as guys, go check out my video on how to use pitchforks. They're one of the most useful strategies and tools I find for trading channels and seeing where the trend is going. And obviously, we're still in a downward trend. I disagree with everybody who says we're in a sideways trend. I say that the downward trend still continues, especially if we get a lower high than this. It will be interesting to see a higher low than this, however, and we'll just see how that plays out. We're going to need a few more days for that to fully play out. I had initiated this level as a no trade zone and short below it. Now, this is playing off the daily candle. Once I throw my time intervals on here, you'll see how I actually was playing this out and how I would have recommended to play it out to people. But I had laughed when we wicked down all the way here because I said, oh, look, we reached my optimum buy-in zone, and now we're full all the way down in my buy-in zone. With the potential to go down even further below this. We see that we broke the median line, and I'm looking for a support level right here at the bottom of the pitchfork. If we break that, then we'll be going down into this blue box area, which is Fibonacci probably an area of maximum potential upside. However, the next area of support based on the Fibonacci lines is going to be that high 4,723, 4,732. So I really am scared. Well, I'm not scared, but I would say I feel the anxiety of people worrying about dropping lower. If we pierce this line, if we pierce this lower low, I don't see support for us until the mid to high 4,000s. Now, it's always possible to reverse and turn around before that, but I'm just letting you know what the charts look like, guys. All right, so let's go ahead and throw my indicator on here so we can actually see how we're playing this out, what it looks like in the long term. We'll go ahead and zoom in. So for you guys who aren't familiar with this indicator, it's the one that I typically use a lot. There's another popular YouTuber that uses it. You can do some YouTube searching on how to do it specifics, or you can stay tuned to this channel and find out how we do it. All right, so what we're looking at here is a 7 of 9 to the downside. So we're looking for a completed 9 count. Now, there are a couple things that are interesting about this. Our last 9 count completed, and although this looks like we're doing a recycling of the 9 count to the downside, we can see that it's sideways action right on the trend line. I mean, we never really we wick below it. We close below it just barely right here. None of this is really relevant price action. This is all just slight noise movement until we finally get that nice kind of pseudo, not a ball bat, but a wannabe hammer right there, and we start our move to the upside. The 6 count is interrupted, and now we continue a new 1 count to the downside. Now, what's interesting about this 1 count, or excuse me, about this new 9 count, is that we're coming up on is that we have a completed 13 countdown, and that is our strong reversal. The trend is exhausted signal. Now, what's interesting is that we have. Let me pull up volume. I want to look at this with volume in tow. Now, I want you guys to look at the volume profile right here. This is the daily reversal candle right here. when we dipped all the way down to 5,800 and then came back up. And I want you guys to see that massive spike in volume that coincided with that particular candlestick pattern, that coincided with that particular price action, that price movement. And that led to, although that led to a declining movement up all the way up to test that 12,000. But we see in relation to that 8,000, obviously the movement was not violent. That's to be expected because that is tons of volatility coming into the system. Excuse me. Not volatility, tons of liquidity coming into the system to buy that dip. That makes a lot of total sense. However, once we get up here and we have this dip down again on declining volume, we see the volume on the move back up was still declining. The movement back up to retest 12,000 for the second time should have told you that we would have gotten rejected because of the declining volume. The interest was weak. The interest was very weak. And we can also see that. In the price action, also in the volume. So now then, as we're moving down, the rejection from 12,000 was far more liquid, was far more violent and quicker, and down all the way. We started this 13 count on the very first initial rejection of 12,000, and that should have been an indicator to you that we're going down low. We have to go down to build momentum to come back up and burst through, because we did not have enough momentum this time. Now, our third retest, when we do come back up here to test 12,000, we should have the momentum after this nice long movement. We've had a nice good amount of space in between these two tests of 12,000. This will be a good, nice, probably a month before we get back up there. Maybe not a month from now, but it'll be a month, 2 months from the last retest of it when we do go back up there again. And I think that we will have the momentum this time to break through that. So that's something to keep in mind, guys. Okay. But we do see, I just want to point that out, that the weakness of this movement up based on volume should have told you that the interest was not there to break this level. And we see it, OBV starts moving down, and it starts moving down quite significantly, and we've just continued to drain down on OBV, our on balance volume indicator. Now, so let's look at the TD though. So we have a completed 13 count, and we're working on completing a 9 count. Now this 9 count will complete unless in the next 2 days, well, we have this candle just started about 4 or 5 hours ago. So we have a full about 18, 19 hours, pretty much all of the day for this candle to complete. And then we will have to revisit and see what 8 and 9 do. So we will have to look at this on Sunday. Today, the shooting of this would be Friday's candle, Good Friday. And then Saturday would be our 9, our 8. And then Sunday would be our 9. So we'll have to just reevaluate and see what it looks like moving forward. But I am looking for this 9 count to complete, which it will if we do not trade above 7,736. So I'm expecting us to remain lower than 7,736 for several reasons. A, that is what I need to see for this 9 count to be completed in conjunction and close correlation with that 13, which should indicate a nice good trend exhaustion and movement up. Now, I'm not seeing here, however, the violent volume coming in here. I'm not seeing that strong volume that we saw right here, this massive interest to buy this dip. It's not here. That strength isn't there. That strength of movement isn't there. Neither does the OBV tell us that the volume profile is moving up either. The interest is not there to buy this dip, and that is indicated, as we see here, by this just continual slow movement down. Now, how would you have traded this? Well, you would have been short as soon as this red 2 traded below this red 1. Now, you guys will see moving forward how I do my updating my stop losses. You would have continued in the short as the 3 continued to move down. At that point, as soon as 3 closed below 2, your stop loss would have moved from your swing high, which would have been right here when you entered the trade. Your stop loss would have been 9,171 when you entered the short here at 8,505. And now that you've closed below the 2, you're going to update your stop loss to 8,671 and continuing to update your stop loss to the prior day's high as you continue to move down. So as you're sitting here right now on the 7, your stop loss should be here at the top of 6 at 7,643. However, the reason that I don't use algorithmic trading and the reason I don't use a bot to execute these trades is because shit happens and you have to be available to take advantage of that shit when it happens. So having said that, what I would do is I have updated my stop loss to right above 7 at 7,162 to lock that profit in. So right now we are looking, sorry, pressed the wrong button. So I pressed it again. Shift is right here. So right now we were looking at a about 15% trade based on this movement. Now, the only divergent indicator that I'm getting right here is this clop indicator, which is an indicator of upward momentum. If we go back and look, I just want to show you guys this. Every time that we get a clop indicator, we're moving up. Here's a clop here, we're moving up, clop here, clop, clop, up. Clop, we're moving up, clop, 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 we're moving up. This is the only time in the last 17 clop signals that we got that we did not move up. That is the only divergent signal though. However, that would be 2 out of the 17 that I bothered to go back and count that we would have not moved up. Now, we are seeing this clop on this 6, and now we are trading below that 6, so we are still in the short with an updated stop loss to catch our profits here. Now, the downside potential, I'm seeing support here at the bounce of the resistance line. Excuse me, my words escape me. I'm seeing support here at the support line, the bottom end of the trend line here of the pitchfork, and then obviously the very bottom right here, which seems the horizontal trend line now, as you can see, corresponds directly with the diagonal trend line. The horizontal support level corresponds directly with the diagonal trend line, and I think that is very powerful support. However, if we break that again, I'm not seeing support until down here in this blue zone, which I will just have to chart if and when we get down to that area. So this ellipsis still holds for me as the area of maximum profitable buy and entry based off this position. However, your most profitable position will not enter until this 9 count closes, 1 to 4 bars of correction to the upside, and then reevaluate and see which direction we want to go from there. Switching to the 4-hour chart, it is looking identical. We are working on a 9 count to the downside with our completed 13 directly back here. All right, with the only support below us, the bottom level of the median line. All right, so let's go over and look at ETH real quick, just so we can watch the plummeting. Now, this one I had done linearly. Now, I had drawn this channel. A couple days ago, and as you see here, we are wicking. It appears to be that we are wicking off the median line. It appears to me that they're wicking off the median line with the multiple clop indicators. We are working on that 13 count to the downside, and we have just recycled the 9 count. So is it possible that we see a completed 13 and a completed 9, or do we have a couple more days of downside to complete the 13 and then a bullish price flip bouncing right off this median line? I don't know. Opinions vary about this. Some people seem to think that ETH is a steal, while others think that there is so much more downside potential. I play the indicator, I play my system, and I'm going to refrain from speculation even though I have my opinions on those particular subjects. I mean, but I'll digress for a second. I think it's bad. I think it's bad for a lot of people who are really believers in Ethereum about the ASIC miners coming out, even though that is the best possible thing for Ethereum from a security standpoint. You don't want ASIC resistance. You want ASICs, the most efficient, secure machine, not secure, but you want the most efficient mining hardware mining your coin so that it is resistant to attacks. All this fear about 51% attacks is exactly why Bitcoin is Bitcoin. Because Bitcoin implemented ASICs and then commoditized the ASIC manufacturing process to make itself more resilient against those kind of attacks. If you spread the ASIC technology around, then that danger of a 51% attack is reduced, and the only way to do that is very comparable to the Second Amendment. In a sense, if you follow the analogy here, if you don't want to get shot, you arm yourself. You decrease the danger by distributing self-defense technology around to the populace, so that centralized authority over the ownership of firearms, over the ownership of the ability and the technology and tools to initiate violence, are not centralized into a centralized structure that could be controlled by a bad actor. The same analogy applies here to mining. The idea that you want to code like Litecoin and like Ethereum, that you want to code it to be ASIC resistant, is nonsensical, because because then your technology, your coin, is being mined by less efficient technology than is available on the market. And the way that you make your coin the most secure, the way you make your chain the most secure, is that you have it being under attack by the most advanced technology available. You have it being mined and secured by the same technology that could be used to attack it. You have to distribute that technology that can be used to attack. You have to distribute that to individuals to be able to use it to defend against the attack. That's the only thing that makes sense. And for people that don't understand this, I invite you to go understand and take a look really how security works in a proof of work system. Quick vape break. But I digress. So based off the system, we're seeing a completed 9 to the downside, coming up on a 13. We're still in a short, although you could have closed your short upon the close of this 9, but now you have a red 2 trading below a red 1, and you could tentatively enter into a short with your stop loss up here above your 1. Or if you wanted to be really conservative, I don't really see the point in that right now, all the way up here at 460. I think a much tighter stop loss at the 387 makes much more sense the way that this looks. So I'm either looking for a significant bounce off this a median line, which we seem to be wicking off of, or a breakdown of it and a completed 9 count to the downside. So again, for this, we're going to need to see what happens over the next couple of days and reevaluate. But I would not be in a position on Ethereum right now. I would be out of my position after the close of this 9, waiting for what happens over the next 1 to 4 bars, and then reevaluating and entering based upon the metrics. Now, if we get a red 3 trading below a red 2, then you might more tentatively enter into a position. But with this low volume and this low volatility, I'm just not sure. I'm not really digging it. If you want to be risky, go ahead and enter a position with a tight stop loss. I'm going to be out of this one for now, guys. All right. That's all I've got for a quick second. Let me go ahead and hit the button. I want to thank you guys for joining me today and going over the price action. If you are new to this channel and you want to keep up to date on this kind of technical analysis and fundamental analysis, and you want to be notified when we go live to answer your questions, go ahead and hit that subscribe button. And if you are a return viewer or a member of the Kraken Crypto community, pound that like button, people. It helps us spread the message and share the news, guys. Spread the love. All right, I'm Justin Wise. Thank you so much for joining me today. Check out KrakenCryptocurrency.com for all your cryptocurrency needs. Probably won't edit that out later. It'll just be a little blooper there. And I hope you guys have a wonderful day. Thank you so much for joining me.